area and its surrounding areas of the Galilee.
Good morning. I'll see you in about 8 minutes. Sorry, my mic was muted. Yeah, someone was talking about anyone trading euro dollar. I sent out an email yesterday. See, yesterday, euro dollar became more bullish. Technical trend got stronger. Came out 1 o'clock. So somewhere in this little arrow. And so if now you're interested in it, you're pretty late. The only thing you could do on that side is set this up. And the news would have created it for you. Okay? And of course, we had the news doing this. Oops. Let me bring it back. Whoop, 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 whoop. Okay. 32 minutes ago, came out as consensus. Years of analysis told us the scalp was to the downside. Therefore, I said even if it rallied up, you'd want to take it down. And it rallied up and it came down to here. Not bad. Okay, that's about 40 pips, 35 pips. And we did this all before the news came out.
Of note for oil names, Iraq's oil ministry says it has signed initial deals for 13 oil gas exploration blocks and fields. That's Iraq just announcing it's signed initial deals for 13 oil and gas exploration blocks and fields. Still waiting for more details.
Cool, right? So at QuantBox today, we got an idea of starting a news trading service that combines our years of technical analysis for these particular news release events in our volatility tool at Tradars.co volatility radar. So we have years of back data on specifically news volatility. And then I could incorporate a live news squawk so that you get the information before everybody else. In fact, you get detailed information. You know, it went through all the different levels of CPI with verbal explanation of everything that's going on. It was really quite extraordinary. Meanwhile, we already had the pattern drawn of up and the straight down, which occurred, and in a matter of 10 minutes, almost 40 pips profit. Assuming it was perfect. Of course, you can't assume that, but it did a 40 pip move that way. So there was potential for love. I had it coming down a little further. I had it like that. But it worked really awesome, though. It was really good. Morning. G'day, Adam. Richard's guessing on why the dollar got strong. The volatility.
For those of you keep an eye on cocoa markets, Mars CEO just talking about the cocoa prices. He says he's expecting normalization of cocoa prices eventually. He notes early signs of Africa cocoa crops being positive, and elsewhere they're just making some comments on the Kellanova deal.
So anyways, what we did is we just went back through years.
A bit more on Iraq here. Iraq exploration deals to add 750,000 barrels of crude.
Okay, I got to pause them for a second. All right. We went through years of CPI data in which the data came out as expected, and we looked at the data on multiple time frames and concluded in scenarios like this, based on what actually happened during the, not just, in the 2, 4, 12, and 48 hours after those news events, statistically, 66.7% of the time, the dollar got strong. So you might be right in your analysis of things were priced in or priced out. Maybe it was this, maybe it was that. Going back years, so I can just pick one. Kiwi dollar on a 4-hour chart in scenarios like this falls. Okay. So it's more like, yeah, you might be right, but this is quantitative. So we had this set up before the news came out and said, well, if it comes out as expected, 66.7% chance of down. Done. See, I have it. So it could be like what you're saying, but it did what it did for a reason. Yeah. New skippity scalp, now done. Cool. But it was really nice to have the squawk as well as our analytical analysis. I know that's a double analytical, but I don't know what you call this. I mean, it's analysis of the vol. Right, it's historic analysis of price action. Man, I should have got more coffee.
And just those that are looking for the implications of PPI and CPI data on what PCE might look like when it's reported on 30th of August, folks at JPM say today's data implies core PCE month on month will come in 0.12%, 0.12%. It's according to folks at JPM. That's foreign market contacts.
Definitely risk on is back. All right, I'll kill the music. We can get on with it. Let me mark this. Yep. Okay, welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and and fundamental analysis with the overriding goal of planning our trades in advance, because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Guten Morgen. Yeah, I'm leaning forward today, right? I'm like, oh no, that's CPI. Well, you know what? It was all right. Okay, yeah, it was all right. We thought there was a plausibility of a tick up higher on the annual, but it didn't. Okay, that's good. So inflation is tamed.
Latest commentary here from Mexico Central Bank Deputy Governor Heath to say that an August rate.
Yeah. Sorry, I had to kill the squawk. So I'm like, okay. So this translates into the Fed has fixed inflation, and now we're worried about jobs. So Thursday's usually benign weekly jobless claims is suddenly going to be important again. Next reading on inflation is PCE, which is after GDP at the end of next week or the week after. I think, going from memory, GDP is on the 29th, PCE is on the 30th, so that's Thursday and Friday. But that's quite a ways off. So the risk on narrative has definitely come back. Now, is there a quick and easy way for you to know if the narrative is changed to risk on? You got something that would do that for you? Well, it's inside Tradars. Yes. So the perfect mix right now, and this is the new version of Tradars, which will be, its doors will open hopefully September 1st. And your perfect will be Traders Way combined with Tradars. Traders and Traders Way. Traders Way is an ECN. This is great. It's quick and fast and affordable because it uses straight through processing, and they don't have a giant dealing desk trading against you. They don't have any trading desk. It goes directly into a pool of liquidity providers. You should want that. Okay? You should want that. So once you have Traders Way, ECN, see, look, if suddenly you make a lot of money, it doesn't impact Traders Way at all, except that you're likely to be a happy client that will continue trading for years. Okay, so that's good. If you become a successful trader with most Forex brokers, it's bad for them because they have to then hedge you or kick you off the platform. Okay? But then you get yourself Traders Way. Okay? Now, Traders Way, and then you get yourself Traders. So right now it's set up, as AI-generated technical trading plans. Okay, cool. So it does watch 7,500 charts, and it looks for only conservative, repeatable trading plans. So imagine with Tradars, every single trade you take is set up with sound technical analysis. No guesswork. You don't think this or hope for that. It shows reliable, repeatable patterns. Patterns. It's not an alert service. You're going to have to use your brain. Okay? But it does technical analysis. Patterns are very basic. If you know how to trade a triangle, you know how to trade a triangle. If you know how to trade in a channel, then you know how to trade a channel. If you understand inverse head and shoulders, then there's only one way to do it. I mean, it does the pattern recognition, shows you. And then it also shows you the next leg. Great. And this is what it looks like. Cool. Double top with a drop on peso. Okay, cool. Aussie Swissy says down. So does that mean sell? No. Dude, can you not see this as support? What it's saying is there's a leg this way, a leg this way, and a leg this way. You should be able to, you should know how to trade a channel. I mean, dude. But that is the pattern. The next one would be up. Okay? Down, up. Cool. Up channel, buy at the bottom of the channel, came out 18 minutes ago, USD yen. Did you see that on your chart? Well, how could you see that when you're looking at something else? Like, did you see this one? Also 18 minutes ago. Now, do you buy these dips to bottoms of channels? Oh, yeah. Okay, it dipped. Okay, then it made a higher high. What do you need next? Higher low. How about there? Yep, it saw it, and now, okay. It also saw this dip. Okay. Do you buy higher lows after higher highs? Yes. See? Cool. So it caught that on dollar yen. Caught that on CAD yen. 19 minutes ago, so 1 minute before that, it saw euro yen, Swissy yen, Aussie yen. Dude, did you miss all these? What were you doing? Uh-huh. Okay. It's cool, right? Yeah, it's very cool. But they're not alerts. They're just the next wave, next leg of the pattern. But it does it for crypto, commodities, indices. Cool, right? Yeah, but you really want to mix this with your bias. How do you get your bias? Ooh la la. That's how you get your bias. Here's your hit list for buying. Here's your hit list for selling. There's your risk gauge today. We got a 3. If you want to look on things on multiple time frames, there you are. We're looking at the entire options market. Volatility, okay? Short-term treasuries, the yen, the dollar, gold, long-term treasuries, the stock market on 3 different time frames, correlating everything into a clean picture of what's actually happening. Not what you think or not what should, but this is actually happening. And these are all professional traders putting billions on the line. And they don't even talk to each other. They all got to their own individual conclusions. And we want to trade with that underlying intrinsic trend. Oh my God. So that you can get to a situation like this. So I'm watching Bitcoin today, huh? Mm-hmm. Mm-hmm. What else? Mm-hmm. Oh, you want to change the currency pair? How about Aussie Kiwi? Are you guys trading Aussie Kiwi? See, if you're trading Aussie Kiwi, you will know that Australia will never cut interest rates. And New Zealand cut interest rates 12 hours ago. But once we get to September, it could be all over. Yeah. Interesting, huh? Good to know, right? Yeah. So anyways, good to know these things. Beautiful. I know. We have, for those that like scalping, we have two different scalping tools. We have pattern scalps. Okay. I don't have a major love for scalps. Okay. But pretty simple stuff. Euro, Aussie, for example. I just lost my mouse completely. Oh, there it is. It's back. I bought a new mouse. It's on the way. So, but anyways, breakout, pullback, long and out. That seemed to happen there. But, you know, whatever. This is not my style of scalping, but you could do it. Okay. Down and pop. Oh, yeah. In and out. You got to be quick. Yeah. So, you know, again, for those that trade this way, you know, these are like 20 pip scalps. No big deal. To each his own. But we have it on a lot of different things. Even if you're a stock trader, which is kind of interesting, a little pop coming in Tesla, I wouldn't do that, but, you know, whatever. But then there's the news trading that we did today, which is volatility. Okay. Yeah, my mouse just died again. Wow. So these are the only things on the calendar for quite some time, okay, till the end of the month, that produce a reliable pattern based on two things. Does the news event on the calendar create volatility? And if it does, so that's the first step. If it does, then is there a reliable pattern after the news event comes out that is repeatable? And if so, it goes on this list. If you just need a calendar, the complete calendar is here, but this is for news, scalping the news. And so we looked at it today. We looked at three scenarios: equal, greater than, and less than. And we went through years of data and looked at the probabilities. Okay? And it said, if it comes out as expected, euro dollar, based on probability of the past, 66.7% chance, down will be the response. So I went to the chart. Oops, I got to go back, I guess. So I went to the chart, wrote it down, and drew the plan. The first move, it popped up. I have to really zoom in now. Okay. First move, it popped up, but we already had this drawn, guys. This up and down was already drawn. So it popped up. It got to about 35, and then it immediately dropped within that same 5-minute candle. So it dropped 35, and we already had this drawn. And not only did we already have it drawn, we can see the past performance, how it got to its conclusion. Oh, what? Okay, so even up means down. Yeah. So anyway, so, we had access to that. Oops. We had access to that data before the news came out. We were ready and prepared. We used the news squawk, which is down, which was good. And boom. And now maybe it's trying a second wave, or maybe it's all over. I don't know. You still have to do your job. But what amazing data, right? So when you have this type of information, and in particular if you're scalping or you're doing vol trades, you're going to need a fast and cheap broker. And since they don't have to dump you into their pool of dumb retail traders, instead they just send you straight through, you got fast execution. Yeah. So anyway, it's cool, right? Cool beans, right? Now, if you really want to see something interesting, you can say, well, is this just a new scalp, or could we get some legs out of this sucker? 75% chance. It's not chance, though. In the past, let me set it up that way. In the past, 75% of the time, in a scenario where CPI came out as expected, the euro dollar fell. Okay, let me pull it up now. Whoa, dropped like a ton of bricks, and then rallied back but closed lower. Okay, volatility all over the place but closed lower. Okay, popped up, dropped, popped up, dropped, consolidated, dropped, closed lower. So they're not clean, right? Oops. They're not clean, easy little trades, except that one was back in March. This is September of last year. This is August 2023. Amazing, huh? That we have all these charts on all these time frames. Yeah, which means if we look at this on the shorter time frame, it'll be pretty nice, right? So that's March. And if we go back and look at it on this time frame, March should be straight down. Yeah. Okay. These are 15-minute candles over 4 hours. So it just dropped for basically 2 hours straight. Oh, see you, Jim. Yeah, that Jim reminds us, tomorrow I am leaving to the West Coast. So I'm spending the weekend doing a charity event. And I manage 4 endowments for nonprofit and pro bono. And I am presenting to the board of directors and the executive team that actually manages the group. So the board and the executive team. So I will be out there away from my wife and my children, trying to make the world a better place, but I'm going to miss tomorrow's live streams, Friday's live streams, and Sunday's live streams because of traveling and then being locked into some skyscraper in California. So I've been doing charitable contribution of time and money since 1991. So what is that? 91 to 01, 10, 01 to 11, 11 to 21. Yeah, 33 years. Yeah. Yeah. And this is the group that, when I was a young man, I became an executive and got to sit on that board, the famous board with George Soros. Yeah. But they put me into, what do they call it? 5 degrees, 4 degrees, 2 degrees of separation. Which is interesting when you're such a young person, and then you're with these, very, very successful people. It's eye-opening. It literally was. I opened up my eyes and I saw the sign. Yeah. Cool. Anyway, so we're just going through that. Okay. So that's Tradars coming very, very, very soon. Everything is integrated. All we're doing is tying in all the other databases into this database. Maybe as soon as Monday, I will have the ability to allow you to sign up for the whole kit and caboodle now. And for others that are subscribed to the other services, that will be sort of the next step after that. So all the day traders and all the swing traders at Investor Bootcamp will be moving here. Then all the subscribers to QuantBox will be moving here. And all the current members of Tradars will be able to add in those other services. And if you already subscribe to all of those things, you're going to save money and get more. So how about that? Yeah, pretty killer, huh? Oh, for sure. All right. Let's move over. The stock market is open. I'll put the squawk on a little bit, and I'll move over to the stocks.
At the margin to avoid dissent on the first cut, this report doesn't resolve the debate over whether to start with 25 basis points versus 50 basis points, and that to get to 50 basis points, you probably need to see something bad in the labour market. And Nick does add a big question for the September FOMC will be how many rate cuts are penciled in for the rest of the year. And lastly, Nick does say mild inflation readings.
I think he's talking about the guy from the Wall Street Journal.
More likely.
The macro reporter at Wall Street Journal, his name is Nick something. Maybe that's the Nick he's talking about. Just playing around with different layout ideas. Caught on the 200 EMA on the NASDAQ. That shouldn't be a problem, though. S&P caught on the R1. Shouldn't be a problem, though. Oh, yeah, look, I was right. Wall Street Journal. Yeah. Huh? You got to know your macro reporters by first name. Doug, I have to do that. So the team will have to let me know. Most likely, I'd like to set it up so it's the same. But the easiest thing, though, Doug, is if you plan on having everything. So imagine the day trading group, $200. Tradars and QuantBox, right? Plus some other stuff coming up. You might as well just get it all. Yeah. Yeah. Well, some people said, they want Tradars but not QuantBox. Other people are like, I want QuantBox but I don't want Tradars, meaning I want the fundamental service but I don't want the technicals, or vice versa. For those people, it'll be $200 a month. If you want everything, it's $300 a month. So I think that lowers your cost from like $356 a month down to $299. Something like that. Hey, dude, $60 a month cheaper? That ain't no joke. Well, you buy on the moving averages, right, Faber? Or you buy on the price action, right? So we're looking at this now, and this is clearly a little buy zone, right? So if we drop it into a small time frame, we're digesting the news and the vol, but okay, so you could do a trap and break from the vol. There's a top. Here's a bottom. And then you go back to a higher time frame. Let's zoom in. The next buying opportunity is probably down in here. Okay. Okay. So the short run, if you're a bull, the longer run, if you're a bull. So, Faber, I don't know. Seems perfectly normal to me. Oh, well, good luck with that. Okay. And you said it seems like it's refusing. I'm assuming you see the monthly R1. Yeah. Maybe I don't understand what you see. When we look at the Dow, okay, a very easy trade going on here as well.
Just the latest energy update. Libya's Waha oil company does lose 115,000 barrels per day due to maintenance on a pipeline from the Waha field to ES Cider Port, according to Reuters citing a company source.
So we can just zoom closer into the Dow.
And this does follow earlier reports in the week which suggested the field was not affected by a recent pipeline fire. And that Libya's Waha oil field of capacity 285,000 barrels per day is reported seen dropping to 100k.
Yeah, sure. I know, but like everything looks normal here. That's all. That's what I'm saying. Like you're saying, it seems to be is refusing, and I'm not sure what you see there.
Just getting on with the usual rundown after the US cash open. US indices initially opened in the green, although have pulled back on the move. S&P down only slightly though, about 0.05%. Nasdaq is down about 0.25%, and Russell 2000 lags slightly down at 0.3%. This move does come after US CPI, which was largely in line with market expectations, except for the headline year-over-year, which did rise 2.9%, slightly below the expected 3%. In terms of sectors, they do open mixed, with financials and real estate outperforming the green, while utilities and communications lagging the red, with pressure on communications stemming from Alphabet seeing a 2% decline as a result of reports that the DOJ is considering breaking up the company after a court ruling defined that it monopolized online search and ads. Elsewhere, treasuries have pared their initial upside to the US data, with US treasuries flat on the session. In terms of foreign exchange, the dollar index is a touch lower on the session, with Kiwi incurring sizable weakness after the RBNZ cut its cash rate by 25 basis points. Meanwhile, the cable does slip to 1.2853 after UK CPI was softer than expected, and lastly, the crude complex is flat ahead of the weekly EIA data in currently about 45 minutes. While gold does fall to around $2,459 an ounce. Looking ahead, the remainder of the day we'll see the aforementioned EIA data, Cleveland Fed CPI, and Cisco's earnings after the close.
Well, Favor, did you? I mean, did you even trade CPI? I mean, yeah, when you looked at CPI,
Just an update here for Brazil's
stock market up.
Does it look to add another platform to increase gas production in Buzio's field? This is according to Reuters science sources.
I mean, yeah, it's the whole thing, right? It's CPI, bro. Oh, I guess so. Yeah, well, look, CPI was down year over year, and as expected, month over month, which allows the Fed to cut interest rates, right? So what do we know? The expected return of a stock is equal to the risk-free rate of return plus the beta of the expected return of the market minus the risk-free rate of return, right? Right? Cool. So if the risk-free rate of return is going to fall, then the value of the stock market will rise. Yeah. So, yeah. But what we're doing here, this is not S&P 500. What we're doing is Australia is never going to cut anytime soon. And these guys cut yesterday.
News out of Iran, a major cyber attack has targeted banks in the country, with the central bank also hit.
Okay, that's what I'm looking for. This is a macro play. Not technical, macro. So now I'm guessing on the technical. So now I have to wait and confirm. But all of this is normal. Dre Day says 350. I think what you're saying is the total cost of everything, except if you commit to everything at Tradars, I'm going to price it at 297. Okay? Right. Yeah. Okay. Cool. Let me delete, close, up, fundamentals. Boom, 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 boom. Let's just jump to the back tester. S&P. Okay. Okay, good. It won't let go. There it is. All right. Okay. And I forgot I messed with this too. There we go. We could go back to April was a down month, right? Yeah, let's start with the down month. It's loading. It was loading previously. I don't even know if it's trying to load the new one I asked it for. Wait, it's still July, August. Oh, come on, dude. I screwed this up myself. But that means I can fix it up. Yeah, there we go. I didn't click a date. Okay. So we know April was down, right? Let me load that. That's a lot of data. Do. Okay. All right. What are we getting at? Okay. On May 31st. So June 1st. Yeah. Quantbox has been a bull. Even during periods where the price was coming down. Okay. Why? Well, technical analysis is just a small part of the overall picture of what Quantbox is doing. Right now, Tradars fundamentals. So looking at the fundamental analytics, even when price was falling, didn't make it economically, how do you say, valid? Okay, and only recently have we started coming back, which is fine. What does that look like? Okay, this is an uptrend. We have our base case, best case scenario. It's already plotted. It's already done. We're bullish on the S&P 500. We're done. So you're like, your PPI month over month, and the logic is great. Yeah, this is bullish. We've been bullish a very long time. based on quantitative analysis of economic data. This is price-time analysis, right? This is statistical analysis of price-time data like any other data set. And it's not pattern recognition. This is statistical analysis. So statistically speaking, the slope of the mean is a positive integer. Cool. So now you can take that one step further and go to stock indices. Okay. There's your NASDAQ. Okay. Tradars threw this up yesterday on a 4-hour chart. Yesterday. Okay. So even then, like it might be going up, and statistically it might be bullish, but there isn't really a good pattern going on with the S&P 500. Okay. Okay. You see what I mean? There are better patterns on other things right now. So like I showed you, today there was an easy trade on Dow. I showed you on my chart. It's also on Tradars. There's an easier trade on NASI and an easy trade on Dow. And you're like, on S&P. And there's no really reliable pattern going on right now. Yeah. Yeah. Do 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 do. Do 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 do. Do 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 do. Do 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 do. Do 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 do. Boop 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 boop. Yeah. So like when you look at what's going on with the euro dollar, let's use this as an example. Okay. Irregardless of the news event today, what's the trend on euro dollar? What's up, Theta? Okay. Euro dollar is a 9. Okay. Cool. So we do this. Euro dollar. Okay. I usually put it up here. Quant box equals 9. Okay. Not -9, +9. This was regarding the news. Okay. So what happened? News is news. News doesn't care about the bias or anything, right? So it dropped from here to here in less than 5 minutes. That's called a news scalp. And we had that as a 67% chance of working out. And what did it do? It went from resistance to support, and then it's done. Cool. Now what? Well, if you're a bull, and we are, you buy at support. Okay, you'll notice that by definition, that is support. I mean, okay, and you could have used this as support, for example. Okay, so you could have known the news because you subscribed to Tradars, and the news came out. It dropped like a ton of bricks, and you knew it was likely to. I mean, look, I drew this before the news, and now you're long and gone. You've jammed your stop, and you're done for the day. Bravo! Bravissimo! Yeah. Right? Short-term short, long-term long. That's how we get her done. You don't get distracted. Pretty killer stuff, huh? Well, it's just technique then, favor. Okay. Okay. I like scalping, but news trading is different from scalping. That's a vol trade. Event-driven trading is different from scalping. And now, when you have vol like this, because somebody said this the other day, and I don't know who it was, but they're like, I can't scalp because there's no vol. There's no volatility. I'm like, dude, you wouldn't be scalping if there was volatility, right? So it's funny how people get mixed up with things. That's right. Like, dude, that's what volatility looks like. You don't want volatility. But scalping, and I've covered this quite a bit in the last couple of days, so if you're sick of it, just let me know. Okay? Up, 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 down, down, buy. Up, 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 down, down, buy. Up, 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 down, down, buy. Up, 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 down, down, buy. Okay? And then crazy vol, up, down, whoa, 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 whoa. Okay? The vol ruins it. But you take the old resistance, it becomes support. Okay? So anyways, you really have to squinch your eyes a little bit here. And let me change this so I get perfectly horizontal. Okay? So this top predicts that bottom. It goes up. This top predicts that bottom. It goes up. This top predicts that bottom. It goes up. Comes right. This top predicts that bottom. And after that, hard to catch. And the vol takes over and ruins everything for a scalper. Okay? So you don't want vol, you want price action. Okay? Remember, making a lot of money quick is the absolute wrong thing to do. I like scalping, but throwing a bunch of money down on news volatility isn't the right way to do it. But, okay, go back and you do a scalp now in the same technique I just showed you on a smaller time frame. Okay? And what's happening here? Right? Breakout, pull back, there's your buy. Okay? The classic way to use these ribbons, okay, up, sideways into the ribbons, up, sideways into the ribbons, up, sideways into the ribbons, up, okay. So it's up. You need to wait for the ribbons to catch up, right? Yes, data. Yeah, September's been priced in for since July. So when you're in Tradars, you'll be able to take the training courses. I don't see what I did with Tradars. Did I close? Did I close it? No. Yeah, I did. Huh. I closed it. Yeah, interesting. I must have accidentally closed it. Anyways. Well, you know, Europe is going to cut 6 times in the next 18 months and all that kind of stuff. You know, what I think and what other people think is totally irrelevant. You have the tools to figure out the probabilities. Now, I think, which again is irrelevant, the Fed should have cut in July. They should have cut once in July, and they should cut another one in December. Way before the election and after the election. 6 weeks after the election. Okay? That's what I would have done if I was me. But that's irrelevant. So what do you do? You look at the facts. Okay? 100% chance of a cut. Is that my opinion? No, that's the opinion of thousands of traders trading billions of dollars. The only question is, 1 cut or 2 cuts? Dunzel, Wayne at fxbootcamp.com. So those are the facts. And you can go all the way out to September next year. So 1 year from now, we're going to be somewhere around 3.25. Somewhere around 3 to 3.5, let's say. Which means what? The 10-year T-note could drop to 2.5? Or even lower? Oh man, I'm going to crush it. I'm going to make so much money. I'm going to make it the money. Yeah, I'm heavy long every bond and every treasury. Wild, huh? I'm long mortgages. Right? Which means if mortgage rates fall, I make money. I'm long corporate bonds. I'm long the 1 year, the 2 year, the 5 year, the 7 year, the 10 year, and the 20 year. I even have, So anyways, whatever. If interest rates are coming down, I'm going to make money on all of that stuff, huh? Cool. So anyways, that's all priced in and part of the analysis. I don't have an opinion. That's just the facts, ma'am. A week ago, 70% of the market was silly and thought the Fed was going to cut. In the middle of the meeting, between meetings, or very, very significantly, like 50 basis points, boom, right at the open. Well, that's come down a lot. And we went from 70 to 45. And this isn't even likely. Okay? Oh, I don't have any cash. Beta. Oh, I don't have any cash. Yeah. I bought 20-year T-notes. I don't have cash, but I have it, right? The 20-year T-note has the best convexity and duration. And I noticed on the Squawk yesterday or the day before, it posted the yield curve. Oops. Not an image, but the actual trading of the curve. So the current prices, and in fact, it was yield of the curve. So I pulled up one of these things, and it showed specifically the 20-year paid the best. It was better than the 30-year. For quirky, esoteric reasons. But anyway, so I bought a boatload of the 20s because it had the best duration and convexity. Nice. Which is the fanciest way of saying, hey, I think I can make more money on that one than the others. So I gave up my cash to own that. So now I don't have cash. I have these 20-year T-notes. But then you sell. So I'm earning about 5% on that. Then every month, you sell call options using the 20 years collateral, picking up another 1% month after month after month. So at the end of the year, I'm earning more than 15%. on an incredibly low risk trade. And that doesn't even count the appreciation. That's just cash from collecting the actual income coming from the government. Because remember, I'm acting as a bank. I'm loaning the government money. So I collect money from the loan I made to the government.
Just on the metals front, so the striking BHP union is said to be meeting the company to see if it can bring the positions closer, according to sources with knowledge. So in the ongoing strike with BHP unions, they're said to be preparing to meet with the company to see if they can bring the position closer, according to sources with knowledge. This follow on from the dispute between the firm and the union itself over nights in relation to the rotation of staff, but it does appear as if they might now be meeting.
Dunzel, I got your email. That's impossible. So you signed up twice. It's impossible. Yeah. Yeah. There's only one way that can happen. Yeah. But I'll see what I can do to figure that out. But I'm not going to have time. So anyway, I got these 20-year notes paying 5% a year. That's income. Now it's also an asset. I can sell the loan. As the Fed cuts interest rates, my 5% yield looks better and better and better, so the price of that bond goes up. So I could always sell it.
Next up on the schedule in just under 10 minutes time, looking out for the weekly inventory report. Headline crude is expected to draw 2.2 million, privates a draw at 3.728, privates a draw at 5.2. This look for a draw at 0.636, prior a build at 0.949, privates a build at 0.6. Gasoline forecast a draw at 1.434, prior a build at 1.34, privates a draw at 3.7. Refining was seen at positive 0.1% from the prior positive 0.4, with Cushing previously coming in a build at 0.579 million. Privates last night were a draw at 2.3, and for production that lasted at 13.4 million, which was a cycle record.
All right, so that oil inventories, right? But anyway, so I own this collateral, and if or when the Fed cuts interest rates, the value of that will go up even more. But I'm using it as collateral and then selling options. So then by the end of the year, the value of the loan will go up. Meanwhile, I'm collecting 5%. On top of that, I'm collecting 1% a month. So that's 10 to 12. It's not quite 1% a month. So it's basically 10% a year plus 5% a year plus the value of the loan goes up. Triple win. Money on top of money on top of money. Oh, yeah. So anyways, get ready for oil volatility. Shoot. Okay, get ready for some noise. Probably should put some pivots on here, huh? Feel nay-nay. So, in the swing trading group, you learn that this predicts this. What I meant was you win on the appreciation, you win on the income, and you win on the options. Options, income, yield, and price. 1, 2, 3. But incredibly low risk and still earning 15%. I mean, how risky is owning U.S. government treasuries? Think about that. I own a boatload of U.S. government treasuries and I'm making 15% a year. Income! That's cash. That doesn't even count the value of the bond going up, the value of the loan going up. I'm not even counting that. It's crazy. About 3 minutes, I guess, to the news. Four minutes and 14 seconds. Okay, expecting a drawdown. So if there's a buildup, oil prices fall. I like to watch the countdown for some reason. 3 minutes, 36 seconds. Two minutes to go. We're looking for a negative 2.2. 2.2 drawdown.
It's just trying to limit out on that weekly EIA inventory report. The headline accrued that's expected to post a draw at 2 million. Worth reminding the private last night was a draw at 5.2 for the headline. Ten seconds.
Oh, I'm so excited. Build up, drop oil.
I'd say headline build at 1.357, 1.357.
Build!
Distillate draw 1.673.
Oil down.
2.894. Refining 1%. Cushing draw 1.665. In terms of the production figure, it comes in at 13.3 million. That's down some 100,000 barrels per day, 0.75%. So that headline that does post a surprise build at 1.357 million. Since was for a draw at 2.2. Last night's private release posted a draw at 5.2. Making this seen a little bit of reaction in the crude space, though ultimately not too different, picking up a little bit from initial lows. Just elsewhere on the fixed income front, UK DLO sell 3.75 billion sterling of its 2027 3.75% yield. That'll take place on the 21st of auction, and it will be via a 21st of August rather, and it will be via a auction.
You guys having fun?
Just a note for Visa, Saudi's PLF has cut its share stake in the name by some 11.7%.
Data says the inverted yield curve is a risk for the economy. No, it's not. The reversion is. All right, so everything's happening. Everything is working as it should. Oil inventories were up, not down. Oil supplies are up, not down. Oil falls. Cool. So now you got your pullback zone. Everything is right as rain. I hope you take the opportunity to click the thumbs up button. And I'd appreciate it if you could leave a comment under the recording. It is important that you do so every day. Maybe you'll record something that you learned, or maybe you just say hi. But I hope you do so. Thank you for your time. Please consider Tradars and Traders Way as part of your business platform. Peace on earth. May the pips be with you. May your profits be above average.